Welcome to the latest Motley Fool scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Travis Hoium and Lou Whiteman giving a 1 to 10 rating to a company struggling with post-pandemic growth. It's Zoom, ticker symbol ZM. Talk about the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Lou's at a 6. Travis is lower at a 4. We'll start with the lukewarm bull.
So credit to the OG, right? Zoom is, of course, the company that taught us that we could demand better than Skype. And, to some extent, they're the reason that we are all doing this in this form today instead of all flying up to Fool HQ and I guess meeting in person, right? They definitely were the right company at the right time during the pandemic. There are a lot of competitors out there now, but in terms of simplicity to use and reliability, I still think Zoom is hard to top. I mean, don't give me this team stuff, okay? Alas, investing is what have you done for me lately and not what did you do before? And Zoom so far hasn't had an answer to that question. They're established enough that there continues to be a viable business here, but pretty blah outlook for what is to come. So I'm slightly better than 50-50 here at a 6.
Yeah, I mean, they used to be great at what they did. If you go back to before the pandemic, it's hard to remember how much better Zoom was within all of the other platforms. It just worked. Even if you were going from desktop to phone. The problem is everybody else is caught up. They were the best at what they do. Now they're just another player. And I think the reason the business is as good as it is a bunch of the legacy companies, so the companies especially in corporate America, and then even in the school systems, if you started using Zoom in March 2020, you're probably still using Zoom. And that is a powerful thing. People are going back to the office. There are more competitors. I think this is a company that went from having a really good product that wanted to be a platform. It's gone from product to being just a feature in a bunch of other tech stacks.
Stock management. A 10 is Warren Buffett. A 1 is Homer Simpson. Similar dynamic here. Travis is at a 4. Lou's much higher at a 7.
So I have a real soft spot here for Eric Guan. I like the story of someone who saw this opportunity while inside Cisco. To his credit, screamed, tried to knock down the doors, says you have to do this. They didn't listen, so he went out and built it himself. And so maybe I'm being a little too kind just because I do think it's a great story. But to his credit, through the pandemic and after, I do think he has been a steady hand at the wheel. He's done a good job responding to the growing competition by keeping Travis. I kind of disagree. I don't think everybody does it as well. I think just in terms of ease of use and stuff, Zoom still is the go-to. I'm going to go back to this, though, that existential question, the what's next question. He's tried to answer it. The regulators sort of thwarted, I think, a decent idea of that, but, the regulators thwarted it, so we can't really, tough. You got to move on. I hate to ding him too much because I don't know who can answer this at this point. It feels like more of a product than a company, but that is sort of the knock on him from here.
Yeah, to me, the reason I went fairly low here is because he hit lightning in a bottle, not only going public at the right time, they actually had a really high valuation when they went public, but also getting the boost from the pandemic. Now you have this huge business. Now you got to do something with that. You got to do the thing that's next. And the point of investing with a company that's led by its founder still is they can see around those corners. They can, do the iPhone after doing, 20 years after doing the Mac. That's kind of the idea of investing in a company that's led by the person that came up with the company in the first place. And he just seems to have struggled to do anything beyond what Zoom was, pre-pandemic. I mean, even the interface looks very, very similar as it did back then. And that's what I just sort of struggle with is it is what have you done for me lately? But from a product standpoint, when that's all you have is just kind of the Zoom platform, you got to do something next. And he hasn't been able to do it.
So let me just say, you can tell the difference in our ages. That Travis says it's a flaw that the interface still looks the same. That's a strength to me, pal. So anyway.
Fair enough. Financials. A 10 is a fortress. A 1 is yikes. A little closer here. Travis says it a 6. Lou's at an 8.
So great balance sheet. The balance sheet is a 10. You got $7.5 billion in cash and basically no debt. You're also solidly profitable, 15% operating margin, nearly a 40% free cash flow margin. They do a good job of making money. The issue here, and the reason it isn't a 10, is that for a mature tech company, which is what we're talking about here now, a slow growth, mature, cash producing tech company, stock-based compensation is still a real issue. They are repurchasing shares by the billions, and yet the total share count is up 7% over the past 5 years. They need to stop that. They need to transition into, absent finding this great new thing, a company that actually returns the cash to shareholders instead of just tries to plug the leaks on stock-based compensation. That's about the only negative, though. The financials are not the problem.
I gave a 6 for financials, and really, you could make the case that this is a great value stock. The problem is the company is not acting like a value stock kind of company, and this is not a place where you want to be a value player. I just don't. If the story is the product's going to be essentially the same, we're just going to keep milking a cash cow forever. That's not going to happen in technology, especially with the competitors that they have in this space. So that's why I just went a little bit lower. I think on the surface, everything looks great from a financial standpoint, but you take a step back and you go, I don't want to look at this as a value company and then get caught in a value trap.
Okay, I can't wait for this, Travis. Let's talk valuations, including your 5-year prediction for the stock price and also the safety. 10 is a sure thing, 1's a lottery ticket.
I said negative returns over the next 5 years, and a safety score is 4. A lot of the things that I've talked about, I think the trends are just not the direction that you want to go. If you're Zoom, I don't know what they do next. Now we have this phase where companies are going back to the office. They're going to be spending less on Zoom. They're going to be looking at, where can I cut a little bit on these platforms that I'm paying all this money to? I just don't see a bright future for the company's products, and the market is not moving towards the products that they have. Things like Zoom Phone, I don't think have really taken off in the way that they hoped that they would. So I have generally negative views because I think this is ultimately a value trap. It's almost like it looks too good to be true because there's not a lot of there for the future of Zoom.
So I'm not really a bull, but I went 5 to 10%. Just, I think, I understand what Travis is saying. I think he is underestimating just the incumbent advantage and inertia. I think they do figure out the stock-based compensation, and on a total return basis, it can match the market. Safety, I'm at a 7 because if things do go downhill, I do think it's a product that can be folded into something else. So I think you have downside protection with an acquisition. Nothing I'm excited about, but I think it peters on for a lot longer than maybe Travis thinks.
If you're looking at history, you had a big whoop and then a big vroom, and now if you look at whatever, they IPO'd at some point, but 5-year returns or long-term returns, it's kind of where it was 4 or 5 years ago, pre-pandemic. Let's talk about Top It. Lou, is there a company in Zoom space that you like better?
So Teams is an inferior product to Zoom, but Teams owner, Microsoft, is a so much better stock, much clearer growth story, better, more diversified investment. It's a no-brainer as far as an investor which one to go with.
Better growth story, better valuation, Alphabet.
Fair enough. Thank you to both Travis and to Lou. They've given Zoom an overall score of just 5.2 out of 10. The future growth is the big question. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Coinbase. Till then, Fool on. Now, Zoom screams the kind of company I love. Strong balance sheet, high floor, going nowhere.
Yeah.
Just,